CHF Capital Markets Executive VP Mark Lackey joins us every week, and this week we're talking about zinc and some of your picks. Let's talk about zinc. Zinc prices are what, $1.02 right now?
That's right. Yeah,
they're down a little bit from where they were.
Down from like a lot of commodities in the last few weeks, but I'm pretty happy, Pat, because if I went back to this time last year, we were sitting at 80 cents, and we said we'd get over $1 in this 2014, and we have. So it's actually up over 25% year-over-year price. So zinc's been going the right way, and it's been doing that largely because as we look on the inventory side, Pat, we're down to a 4-year low now, and you know, there's about 19 days in the LME warehouses right now, down from 25 days. So the inventory numbers have been coming down, Pat, because again, there is not enough production out there to meet the demand in the short run.
Let's talk about both sides of those.
Yep.
The production, the demand side of the equation. Zinc is used primarily automotive.
That's right, Pat. That's the biggest use, as you're right. Galvanized steel, largely automotive, then probably non-res and residential construction. And then the other two areas where it's starting to grow now are more in the medical areas and fertilizers. Particularly in the third world, they're adding zinc to fertilizers. Is actually very positive for people that are zinc deficient. So the real key here,
upset stomachs.
Yeah, exactly, Pat. That's exactly right. And it's interesting how positive that's turned out to be in places like Pakistan and Bangladesh and some of the South American and African countries where it's been added, because we don't have zinc deficient diets here in Canada so much, but they do a lot of other parts of the world. But as you point out, the really strong area is in the auto sector, and we've talked about this before, how strong the auto sector is in China, how strong it's been this year in India. It's been growing in Indonesia, and it's done fairly well in the United States, and I expect that to continue over the next 2 to 3 years. Good growth in the auto sector.
Still the case that you're a bull on the Chinese economy?
Well, you know, Pat, it's interesting you mention that, because the numbers that came out were better than expected. The GDP numbers were 7.3 as opposed to 7.
I don't necessarily trust the numbers, though.
Well, you know, Pat, the one thing that I have to say, though, is that because they're part of the World Trade Organization now, and we can cross-check our import numbers with their export numbers and our export numbers to their import numbers, and on those numbers we can say they are right. Now, you can say you maybe think their consumption numbers might be higher than they are. I mean, we can't say for sure, but I think statistically I have a lot more faith in China's numbers today than I would have, say, 10 years ago when we didn't have these cross-checks.
Right. So
I still believe that the Chinese economy will be strong enough, because again, on zinc intensities continue to rise. So I don't need 7.5 or 7. I'd be happy even with 6, 6.5 will keep zinc demand in good shape. We have to really kind of go down significantly before I get worried about zinc demand.
Okay, and that's all automotive based.
Right.
What about the supply side of the equation?
And that's the reason I really like zinc, is that, which we've talked about before, Pat, 3 big mines were scheduled to close. Brunswick mine has closed in New Brunswick. It's mined out. The same thing happens for the Century mine next year in Australia, and in 2016 Lachine disappears. So the new mines can't match what's left the market, and since we're drawing down inventories, I anticipate more of the same. So in that scenario, Pat, historically you get higher prices.
Okay, but are there other sources of zinc? For instance, those mines you mentioned, at least I know the Brunswick mine was primarily zinc.
Right.
Is zinc a residual product of copper mining or iron ore? Or
largely silver. Now, the interesting thing there is, Pat, with where silver prices are today, and I'm glad you made this point because it's a very good one, some of the zinc that might be in the market won't be, because there are silver mines who've been shut down at $17, and some of them need 22, 23. And as much as I think we might get back there next couple years in silver, it's no guarantees. And so some of the zinc has left the market as well because it's byproduct of silver. And I think some of those silver mines are going to have trouble getting back into production given where silver prices are.
What about geopolitical risk too? You know, obviously Brunswick mine is geopolitical stable, but you know, look at what's happening in Africa overall. I mean, does the temperament change?
Well, it's a good point, Pat, because look, I'm only going to be mentioning companies today that are in areas that I like, you know, and regions that I like, but there are some zinc prospects in parts of Africa and South America that do have geopolitical risk, no question about it. And I haven't even necessarily been that negative to suggest that the supply will be restricted from those areas, because I have the zinc price, Pat, in 3 years at $2. I have it doubling. But some people actually, there's a few people have it higher than me, and that's because they're worried about the geopolitical risk that particularly in West Africa with Ebola, and some of the other issues that are in Africa, and some of the issues that have propped up in South America as well, in terms of some of the geopolitical risks. So I've offset that to some degree because some of the silver mines will come back, some zinc will come into the market. So I don't want to go higher than $2, but I think a doubling of the price is pretty effective for anybody who wants to invest in the sector, given there aren't that many opportunities in the small and mid-cap sector, Pat. We've lost 11 companies through takeovers in the last couple of years in the zinc market. There's been a lot of concentration in this marketplace.
Okay, so let's go through your picks because they could potentially be candidates again.
They certainly could be.
Pasinex.
Pasinex, Pat, mentioned it once before, got on my radar screen in the last 4 or 5 months. It's a play in Turkey. They have the biggest Turkish mining company as their partner, Ak Metal. They're already producing. They came up with really good drill results last summer, and they've had some great results on some of their surface work, bulk sample work they've done. In fact, those numbers are so good, I would suggest that some of that zinc could be DSO. In other words, they wouldn't even have to smelt it. They could merely ship it offshore, the way they do with iron ore at high levels. So I like what Steve Williams has done. He's done a great job of putting together a good team. He's added some very good board members recently as well, top zinc people. And I think he's in the right right area. Turkey is a country that's got great zinc potential, and you've seen a lot of Canadian money going to Turkey in the last 5 to 10 years. And it's really a beacon of light in an area that has some other countries that admittedly have their problems.
Well, listen, I'll take exception to that because Turkey is not behaving very well when it comes to Syria, for instance, right now. So I'm not sure about the geopolitics there, but it doesn't matter in the zinc market.
I mean, I understand on this whole ISIS situation, it's somewhat different than, I mean, Turkey hasn't really had anything to be terribly involved in the last number of years until this situation's come up with ISIS and the Kurds, and we recognize there are some issues there. But I think on balance, Pat, when I look at a country that's had strong economic growth, has a pro-mining environment, I think this issue in Syria is not going to really influence or have any impact upon the Canadian mining companies in Turkey. That's what I'm looking at, as opposed to if you were trying to mine in Syria right now, for example, I think that would be a place I'd probably avoid. Yeah. So I think that internally, I recognize there are always going to be some issues, but I like the way Turkey's been able to grow and handle itself in its mining jurisdiction and its mining aspects over the last 5 to 10 years, and I expect that's going to continue, which is what's critical for Pasinex.
Okay, good. Vendetta.
Well, Vendetta, Pat, they're in Australia. So, yeah.
Turkey
but what's interesting about Australia, Pat, is that parts of Australia, you have some real infrastructure issues. A lot of ports that are full, and it's tough to find appropriate mining people. But they're in Queensland, and they're in an area where, frankly, you don't have the infrastructure issues. They have plenty of infrastructure. They have port facilities available. They have smelters available. So I think it's important for people to recognize, because I do get people phoning me up saying, gee, there are parts of Australia, Mark, where right now it's tough to get the mine taken care of. And I said, no, I understand that. So you have to go around and look at where you are physically. This company is run by Mike Williams, so I guess it's the Williams Day here on our show. Mike has put together a really strong team. The company is now just started to announce its drill program. I see this as a relatively new producer, a near-term producer in the next couple of years, because they're in an area, Pat, where they produced zinc in the past. So, and Mike Williams made us a lot of money. He was Underworld, which was a 10-bagger, was taken over. It really started the whole Yukon gold rush. And so he's back now in the zinc area, and I like what he has. And of course, the advantage of Australia, Pat, is that, you know, you're very close to China and India. You get good netbacks, given the transportation costs are a lot lower than if you're out of Mexico, Peru, or British Columbia.
The two Williams are not related,
No, they're not.
No, okay.
No, they're not.
Morgan Resources.
Morgan Resources, there's, as far as I know, no Williams in this company.
There probably is somewhere.
There might be. Morgan came up on my screen very recently, Pat, and the reason is that I like New Brunswick. It's one of my favorite jurisdictions. In fact, the Fraser Institute 2 years ago said it was the best mining jurisdiction in the world. There's been a lot of zinc mines in New Brunswick. There's high-grade zinc. And what these guys had done was, a very new company just listed this year, but they saw 2 properties and they were in there before some of the competition, and the geophysics they've done on them, really high-grade zinc. So yes, it's early stages, Pat, but I always like to have one greenfield play that could be a home run, given a good management team, and given the fact that they have found with the geophysics some very high zinc. Now obviously they're going to have to drill these properties. This is not going to be something producing in the next year or 2, but if you believe my zinc price, where we're going to triple in 3 years, then I think this is the kind of company that could hit that sweet spot. Much higher zinc prices with really a very good management team and a very good 2 projects in a mining-friendly jurisdiction.
Yeah, by Canada.
Absolutely. I mean, you'll notice, Pat, I only put companies on the network that actually trade in Canada. and I realize there's some other opportunities elsewhere, but I stick with what I know because it's easy to, and the Canadian exchange has the rules, and everything's going to be adhered to, and you recognize it when you're dealing in Canada what you're dealing with. Yeah. And so I've always taken that view that I only deal with companies that are trading on the Canadian exchange.
And that's why we have you here every week, Mark. Great to have you here.
Good to be here.
Next week?
Next week we haven't decided yet. We're looking at 3 or 4 possibilities here in terms of various metals. So.
I'm so excited. Mark Lackey joins us every week, CHF Capital Markets Executive VP.